Yo, what's up, guys? I hope you are doing good today. We're just going to do a small recap on the indices. Today is March 9th, and yesterday it was NFP Friday, which is March 8th. And pretty much the entire day I did not see my model anywhere to trade off of. I mean, I wouldn't have traded it anyway, but just going through and tape reading and looking at the charts live, looking for a setup I can possibly take, like a mental trade once again on these improbable days. I always tried to do that, and I couldn't find anything. But this is something that you could also study, that I've studied, and it is very helpful, which is the bearish order flow that went on yesterday. It changed real quick and targeted this high time frame volume imbalance that went from Thursday to Friday, right? So this is a volume imbalance. Price will usually retrace back into it especially when it's this big. All right, so going into the day, I knew that we were most likely going to have a Judas swing. We are at all-time highs again, so there is no high time frame PD array that we traded into or price traded into to have a continuation downwards into this volume balance. But I knew throughout the day, most likely we were going to target this volume balance, this high time frame volume balance. So looking right here, market opened 8:30 right here, and we targeted the London high, took it out, took a little retracement back and down into this 15-minute BISI for continuation higher, and we started to see a change in order flow. Right, we went from respecting bullish PD arrays to now disrespecting the bullish PD arrays. So it's now a change in the bearish order flow, or it's now a change in the order flow. So we went from bullish order flow to bearish. So now we're starting to disrespect these bullish PD arrays, and that is giving me a more bullish bias. That is usually what I trade off of, right? So if I see a high time frame, let's say 15-minute or hourly BISI, and it gets disrespected going to the market that morning, my bias will most likely be bearish, or pretty much bearish in that scenario. So in this scenario, it'd be bearish. 15-minute is not really a super high time frame, but if you go on the hourly, you don't really see very significant imbalances. But yeah, usually we'll take it off of the high time frame ones. So 15-minute right here, disrespected, inverse, disrespected, inverse, disrespected, inverse, right? So usually a lot of people, when they trade inverse fair value gaps, they trade it off of the close, right? So they just do a market execute right when it closes over this 15-minute SIBI, or BISI, I meant. So right when it closes, it confirms that this is now an inverse fair value gap. A lot of people just market execute and just sell right here and then wait for the market to go short and lower. But usually what I do, I like to be on the safer side of things, and I wait for a retracement. It's not riskier. You just have a higher chance of it not retracing back into it and filling you in. But it is a better, it's a lot safer for me because I do have a better stop loss, a lot safer stop loss when I do this type of stuff compared if I execute all the way right here. I have no clue if it's going to reach back into this and stop me out, you know? So I like to be on the safer side of things. But so bearish order flow, go into that. Really didn't see any trades. It pretty much just ran for the entire day. I mean, it just on the other indices too as well. We'll look at it in a second. But Nasdaq, it just ran away. Price, it had barely any pullbacks. It had this main mover here, dropped, and no pullbacks whatsoever. I mean, like this is the only trade where I think like I wouldn't even take in this trade, but this bullish fair value gap, 5-minute fair value gap, got disrespected, and it literally they tapped into it to the tick, right, and dropped. But I mean that's not a good trade for me at all. That's considered a BPR actually, but it did not trade back into it, So that and then there's a breaker right here as well. Usually when I take trades off of breakers, I like to have a significant fair value gap or another confluence, maybe an inverse fair value gap or order block. There was none, so that was not a good trade I would have taken. And then later in the session, going into the PM, it did end up retracing back down into this hourly order block that I marked out at the beginning of the day, right here. Marked out that hourly order block, and it ended up trading back into it right here, and then dropped further to finish off the day. So that was my thought process. Overall, Judas swing, disrespecting these bullish order fair value gaps, changing the state and order flow, and at the end of the day, targeting this high time frame volume imbalance to finish off the week. Now going into NASDAQ, pretty much the same thing. Like I said earlier, price really just ran away. They had this Judas swing, again, all-time high, so we have no idea when the Judas swing is going to take place. But we have this. It's not like I usually don't like taking inverse fair value gaps like this because it is filled, but they can sometimes work and break below it and then retrace back into it. But I usually like kind of like cleaner ones, kind of like this, to trade back into. But again, change in the order flow. It started to respect this fair value gap. This was a 15-minute BISI, respected it, continued up, dropped, disrespected this bullish fair value gap, and then disrespected this bullish fair value gap. Broke through both of them, right? No retracements whatsoever. Let's go on the 5-minute. No retracements whatsoever at all. I mean, fair value gap right here, didn't tap into it. I mean, that's what it is, you know. Fair value gap right here, didn't tap into it. It really just ran away. Hourly order block right here, it didn't tap into it, ran away. I mean, like, there was just nothing to really trade off of today. And that's really what NFP is about. It's just reversing. It's a high chance of Judas swings and reversals. That's why I don't like to trade it, and that's why a lot of people don't trade it. And when it does reverse, there is usually not many pullbacks. In my instances when I trade it. So, but yeah, overall, just ran. Price no pullbacks, but it did target this volume balance like I predicted, and this new week opening gap. If you do not know what a new week opening gap is, it is where the start of every week you have, let's say Friday 4:45, right? That's the closing time for the markets for the weekend, right? So the close to the open on Sunday at 6 p.m. So you are going to in this instance, bearish candles, they open at the bottom, close to the top. Bullish candles, they open at the bottom, close to the top. So you want to go from the close from Friday to the open on Sunday. And it'll be right here. I don't know why I marked it like that. That was weird. From this to this. And that will be the INWOG, the new week opening gaps, which is what ICT taught about. I'll link his video in the description if y'all want to look at it and understand new week opening gaps further. But it's pretty simple. I usually mark about 4 to 5 on each of my charts from like previous weeks, because over time they will end up. It's a good area of price to retrace, not retrace back into, but go back into over time. And ICT talks about that. So if you want to go watch that video, he talks a lot about it. Going into Dow Jones, trashy price action today. Really, just I mean. It kind of did retrace back into the volume bounce, but not as much as the other indices. Kind of just shopped around for the day, and it's just kind of trash. And going into DXY, we ended up, I don't know if this is a 4-hour. Yeah, we ended up hitting this 4-hour BISI right here. And also this huge 4-hour volume bounce. And we bounced off of it, respected this 4-hour BISI, didn't close over it, wicked it. The entire thing filled it completely. And now we are in this volume bounce, 4-hour volume bounce. So going into the week next week, we'll see what happens. Overall, I'm expecting on DXY for us to possibly retrace into these two 4-hour CIBs. and push that, or help this be an area of resistance for price to continue lower. Right, so that's my thoughts on March 9th. Wait, whoopsie daisy. Yeah, March 8th. NFP Friday. And yeah, I hope y'all enjoyed today's video and got something out of it. Y'all have a good one. Peace.